Hello and what is going on, lovely people of the internet? It is HOOTMONEY here with another video for you guys today. Today we are going to be talking again about Virgin Galactic or SPCE stock today. And yesterday we got hit with the news that they're going to raise $500 million worth of stock, selling those stock at the market, and the stock price absolutely plummeted after that news. And a lot of people were angry, a lot of people were mad that Richard Branson is just capitalizing off of his shareholders. He doesn't care about their shareholders, etc. And while that is true, he is capitalizing off of his high share price that has been driven up by retail investors. I do think it was a smart thing to do for the company, as it is high cash intensive business. He has to have more cash because this is a cash intensive business. Their costs just for 2020 alone were $750 million. So they need that cash in order to continue operating this capital intensive business. And personally, I think it was the right move for this company long term. However, other people do disagree. Now, with that said, Virgin Galactic stock has dropped, and we're basically going to do an analysis of how far this thing can exactly drop, whether or not there's going to be more pain ahead, and what price I think is a good time to get back into this stock. So if you guys enjoyed these updates, make sure you guys leave that early like on the videos. Liking the video is the #1 thing you guys can do to help me out here on this channel. And also, if you guys want to talk about stocks, we have a Discord channel. Link is in the description or in the pinned comment section. It's 100% free, and you can join my community, and we talk about stocks each and every day. So definitely join that if you are interested in that. And without further ado, let's get right into the video. Alright, so here we have Virgin Galactic Holdings sitting at $41 per share. Now, it started the morning with a bit of pain. It was down 6%, but it has seen a strong recovery into the morning. If we see the week chart here, it's down 11% from the week. It was at highs of about $52 a share, and it's dropped about $10 per share after that news, the news event that we saw yesterday. On the month, it's still up 12.76% on the month. So it's not as good as that 53% gain on the month that we had at the end of June and early July, but it's still really, really good. 13% in a month is very, very good return, so I would not be too mad about that. 3 months, 52%. Again, extremely good return, especially if you got in around $16 or $15 a share in the middle of May. That would have been a great, great swing trade. Anyways, guys, Virgin Galactic plans to sell $500 million in stock, and shares fall 17%. So that's exactly what happened yesterday. They announced that they planned to sell $500 million worth of stock, and their share price plummeted. And like I said before at the beginning of this video, I think that was the right move, even though a lot of people don't understand that this company is very, very capital intensive. They nearly spent $750 million in 2020 alone, so they really do need cash because they don't currently have just $1 billion in cash on their balance sheet. So they need to raise that extra cash in order to continue to invest in this business, as this is a zero revenue company. They don't have any money from actually selling any products, so they need to raise money in order to operate. That's just how it works. Anyways, guys, we're gonna move over to FinViz here, and you guys can see what exact pattern they are looking at on Virgin Galactic, and you guys can see they drew in a double top right here, which is a bearish trading pattern. They also had this blue trend line, as you guys can see, on its way up, and it's currently broke that trend line, which is also definitely a risk in this stock. I also just want to go over the fundamentals, although a lot of people will just dismiss this. Their price to book ratio is almost 23, which is absolutely absurd. This company is trading at an absolutely insane premium right now with a market cap of $10.5 billion, and they have yet to make any revenue whatsoever, and they also have really bad return on assets, return on equity, etc. They are a cash burning company, and they aren't really making much money, and they're trading at such a high multiple to what their assets are worth. It's just a really, really risky play in my opinion. So buying this stock near an all-time high, it's just not something I would ever recommend. Now, if you want to trade this thing for the short term, go ahead. But in terms of long-term investments, I would not touch this near its all-time high, which we're seeing right now. If you want up to $70 in free stock just for signing up and depositing at least $1, use the links below to sign up for Public. Public is a stock investing application / brokerage / social media that is just way better than its peers. Public, you can follow people, you can post, you can buy and sell stocks. So if you follow someone, you can see their portfolios, you can see how they feel about a certain stock, if they've made a post, and you can use all this to become a better investor and learn more and be educated. Guys, with what we've seen in 2020 with retail completely taking over investing, an application like Public is a great way to get other people's opinions on stocks, and it's just fun, guys. Just like Instagram, Snapchat, Twitter, it's just fun to look at. Public is the same way, but it's all investing, it's all stocks. So if you want up to $70 in free stock just for signing up and depositing at least $1, use that link below to sign up for Public. Anyways, guys, let's get right back into the video. And for the purpose of entertainment, I don't really take a look at financial statements for your guys' sake, but in 2020, they had $116 million of selling, general, and administrative expenses, $154 million of research and development expenses. That adds to a $275 million loss in operating income for the company. They have an other income expense of $371 million. This adds up to a total net income of minus $644 million. So this is what I was saying, guys. This is a capital intensive business. They need almost $750 million a year to operate, and they currently have absolutely zero revenue. So sitting at a $10 billion valuation is, well, it's risky to say the least. Anyways, guys, enough with the fundamentals. We're just going to take a look at this from a technical perspective, look at the technical analysis, because it's pretty clear how this stock likes to perform once it rallies up. As you guys can see, it rallied up the first time right here, and this is basically the entire history of its stock price. So it rallies up, it sells off, it goes under that 200 moving average. It rallies up, it sells off, it goes underneath that 200 moving average. It rallies up, it sells off. This is the only point right here where it does not go underneath its 200 moving average, and it continued to rally up to new highs. It goes all the way down, it bounces off that 200 moving average right here, and then it continues to sell off. Well, we rallied up again. We saw a double top here at this value that we hit in February on this stock, and well, it's starting to sell off, but it hasn't quite done that yet. So guys, we have to take a look at some of the other rallies just to get an idea of what exactly might happen with this stock. So how about we go here to the first rally? We take a look, we do a Fibonacci retracement. We see what level it usually sells off to. It usually goes underneath this 78.6% level all the way down to almost 100% level for the sell-off. Then you guys can clearly see that it's in between the 61.8% level and the 78.6% level, and it saw that as a resistance point right here, but also a support line. So this definitely is a bit of a significant technical analysis indicator, as we saw it use those two Fibonacci retracement levels as a channel originally. Alright, so we're going to take a look here at the second rally. So we're going to do a Fibonacci retracement all the way here, and you guys can see again, it sells off into this 100% Fibonacci retracement range, as you guys can see right here. We'll do it again right here. This is the one time it didn't dip below that 200 moving average, and you can see it goes in between that 78 and 61% Fibonacci level. That's where it sold off to. We saw a low right here of 22.88 in that price range. Then again, we're gonna do it right here once again. As you guys can see, it sold off almost 100% after rallying to all-time highs, and this was when it rallied to all-time highs in February of 2021. And as you guys can see, it dipped even below that 100% level for just a bit there in May. So that leads us into this rally that we've currently seen, and as you guys can see, we're gonna do the Fibonacci retracement, and we're gonna put it up here, and you guys can see we're currently sitting at around the 38% level. Now, every time this stock has rallied to new all-time highs, we've seen a sell-off to at least the 78% level. So I think there is definitely more pain for this stock, and if you really do want to get invested in this stock long term, I highly suggest waiting until this thing is under $24 a share to get invested. Now, the Fibonacci retracement is not the only thing that I want to use as a technical indicator here. As you guys can see, we're looking at the MACD for this first run up that we already analyzed with that Fibonacci retracement. And as you guys can see, there was clearly a run up, and as soon as it reached a new all-time high, it quickly reversed and the MACD got oversold, and you can see we're in this negative MACD territory after it reached a new high. Then we come over here, the second run up that we analyzed. It goes up, it rallies, but it's treated with an equal, if not greater, sell-off. Again, right here, it rallies on the MACD, goes into an uptrend, but it gets sold off. Now, this is the only time it's sold off, but it didn't get back to that 100% level. Then it turns into rallying again, reaching all-time highs once again, and it's met with an equal or greater sell-off here according to this MACD. Now we're in a territory again where we have seen new all-time highs, or not quite new all-time highs, but new highs on this stock. The MACD is signaling that it's going to be a sell-off, considering that we've just entered this red territory on the MACD and these two lines have crossed. And just basing this off history, it shows that there's likely more room for this to sell off back down to some of these lower values underneath $30 per share. Now guys, technical analysis, it's never going to be a better indicator than actual fundamental changes in the company. However, we looked at the fundamentals of this company. They're not too strong, and they're selling more stock, adding more dilution to the company. So it really is hard for me to have a bullish outlook on Virgin Galactic currently. I definitely would avoid buying this stock at the current price levels. I don't think you're getting a discount even though it is down from its all-time highs. And I personally do think there's a lot more room for this stock to fall. So again, guys, it's just my opinion. That's all it is. It's just an opinion. It's not facts. I'm not telling you that Virgin Galactic will fall. I'm just saying that it is probable that it will fall based off of my judgments. So it's up to you to respect my judgments or not. Anyways, guys, I hope you guys enjoyed the video. I enjoyed making it as always, and I hope everyone has a fantastic day. Remember to subscribe to the channel and turn on post notifications so you don't miss any of these updates. I make updates like this multiple times a day, so I hope you guys have enjoyed all that. Remember, liking the video is the #1 thing you guys can do to help me out here on this channel. And if you guys want up to $70 in free stock, as long as you deposit $1, use that link below to sign up for public. Anyways, guys, I hope you guys enjoyed and have a great day. Peace.